We are bi-coastal this morning. We're based here in Irvine, California, and Anton is in DC. Let's go live. Thank you, thank you. We're doing this. It's coming up. All right, so we are live. So welcome everyone. We are here with Anton. How you doing?
I'm doing great. How about yourself?
Hanging in here. So thank you very much for joining us. So we are here at Know the Rules of the Game podcast this morning on this beautiful March 17th. I have my green for St. Patty's Day on. All right. So the idea is that this is regarding federal policy for Black home ownership. I'm here with Antoine Thompson. He is the executive director of NAREB. And the idea is that I run the Women in Housing and Real Estate Ecosystem in NAREB. I'm also the advisor and investor for Amicus Brain, and also I run a real estate brokerage I have for over the last 30 years. And the idea here is to actually bring out the if I only knew. So we trademarked Know the Rules of the Game 2 years ago because we want to make sure that you are in the pocket and you understand the rules no matter where you come from, what background you are, so you can make sure you have access to information, because we don't want to ever hear you say, if I only knew. So thank you very much for joining me this morning, and we're going to talk and dig deep into what it's like. And so a little bit of background about Anton. We are here. So he leads the largest organization, African-American real estate professionals in the United States. He's partnered with Creative PMO Solutions and consulting firm that focuses on diversity, inclusion, and advocacy work. Yes, that's what we love around here. He's also a licensed real estate agent. When did you get your license?
2011, 10 years this year.
All right, decade. I got 2 on you. Anyway, and he currently holds it with Matry, Murphy, and Bergen Realty Group. I hope I pronounced that right. And he's also a partner with the Black Politics Today. Anyway, so we're going to go on and we're going to move on. So what is an incredible fun fact about you? I'd love to hear.
Well, I mean, there's a number of fun facts. I guess I say the first thing is most people are not, some people know I'm a member of a fraternity. And in college and still to today, they call me Big Brother Joker. So when I was in college, I used to actually, the movie Batman was out, and I actually had a shirt that, and I still have it somewhere in one of my boxes with the Joker on face on it and my fraternity information on the back. So I always smile a lot, you know, joke a lot. And so a lot of people see me as seriously, but in the fraternity, when I pledged and in my college days, they called me Big Brother Joker.
I love it. So the question is that, have we ever seen you on stage impart that personality?
I'm sure that if you find some college videos, you'll see me doing, you know, wearing my t-shirt. In fact, I was going to post it on social media the other day, one of my shirts with my fraternity name on it and all that. But I have, it's enough out there if you look hard enough.
I would love, honestly, I would love for you to do that. And I challenge you, because it's Choose to Challenge on International Women's Day on March 8th. So I challenge you to put it on, or at least bring that attitude that you had in college on screen so we could see it. And the reason I say that is, as we were talking right before we got on the call, is mine is inspiration for 2021. So you coming in with that live as the director of this biggest organization, and we're talking about Black homeownership, and you think of going to DC, you know, I got, that's right, you can't wear that. You can't wear leopards to DC. You got to be very prim and proper. Everything has to be just perfect. And I'm like, all right. So the first time I saw a woman wear a scarf that was a little wild, I said, I'll bets off. I wear what I want. I'm going in there, and you just take it. So to that, I challenge you to get on and show a side of you that we have not seen, because I have not seen that, and bring it to the end. I think it'd be exciting, because if you think about Black homeownership, you think of any homeownership. We want to have the energy to say, I can do what I want to, this is my sanctuary, this is my walls, and how that runs, right?
Sounds good. I'll give that some thought and consideration.
No, it's supposed to, you're supposed to accept the challenge. It's not us. I'll think about it. I'm going to talk to your fiance, and we're going to talk. I didn't know who it is, and I got to figure it out. And I told you this is going to be organic and live. This is not boring. All right. So you're in DC, and how long you been there?
I have been here 6 years on April 6th.
All right. So how has life changed in the last 6 years since you've been there about the federal policies?
It's been incredible, to be honest with you. So when I came in 2015, obviously NAREB is the oldest Black real estate trade association in the country, founded in 1947. So we're always focused on diversity and inclusion, fair housing, fair lending, and growing and closing the gap on home ownership. But in 2015, I remember going to some of my first meetings on Capitol Hill with the association, and how challenging it was talking about some of the issues that we care about. And I remember in 2016, right after we announced this effort to create 2 million Black homeowners, and we were going to members of Congress offices, both Democrat and Republican, and trying to get, and the White House, and trying to get them to understand some of the pressing issues that were really holding back Black home ownership, like loan level price adjustments, risk-based pricing, life of the loan on mortgage insurance, the need for more down payment.
So sorry, explain what some of those are. So you're throwing out terms on everyone on the audience is going to go, what? So take a step back. You know, you and I can understand that instantly, but give me a couple.
So in 2015, when I started, we were really trying to talk with legislators about some of the barriers to home ownership that were being impacted by federal policy, or either lack thereof, or policies that had been put in place. And so at that point in time, many of the legislators were like, we're not even touching home ownership right now. We're coming out of the Great Recession. It was partly due to banking policies and exploitive policies that stifled home ownership. We're not even touching that. So by the time we got to the 2016 elections, none of the candidates would even talk about home ownership. And so, we had to really double down on those efforts, really educating, organizing, being in their face, putting out our annual State of Housing in Black America report, building coalitions with other groups. And now, 6 years later, we can't, the day doesn't go by without some type of article, story, or week doesn't go by without the press or some organization asking what needs to be done to close the racial wealth gap through home ownership. What are the policies that need to happen? What can Congress do? What can the private sector do? What can the community sector and faith sector do to deal with this issue of this gap in home ownership? So it has really changed over the last 6 years. But the fact of the matter is we still have a long way to go. But there's an army of people who are really fighting on this issue now, unlike it was 6 years ago. And America has awakened to the issue largely because of a series of things around not only George Floyd, but the aftermath of that around Breonna Taylor and some of the other violent murders of innocent African Americans. And then this whole issue about the pandemic, the disparities that it has shown, and the fact that people who own homes probably doing a little better than people who are renting. So the environment right now, and then you have a president of the United States and Joe Biden who has said that he's going to try to do something about it. Now, we're not naive to think that he's going to solve all the problems, but we know that the president has a way to influence the markets, influence behavior, both from a legislative, regulatory, and from a consumer and industry perspective. So a lot has changed in 6 years. A lot has changed.
That's fantastic. Well, as we were talking before we got on the call, the impact of what's happened here at NAREB and the women's movement too. I think all of us have gotten an awakening of helping, because the issues at hand, we all can help each other. The debate was for, because of this International Women's Day, a lady was from France got on with me, and she says, you know what, the ESG, the sustainability goals for the UN was talking about we should have gender, which is number 5 at the top, and everything fall underneath it. Because the fact is that we could talk about, it doesn't matter in my opinion. The reality is that we are working together now. We're helping each other bring the issues to light that are within our sphere of influence and help we can change. So if we go back to the terms that you were talking about, red line, segregation, things like that, that are going into what's cost adjustments that we talked about, the appraisal that just happened where I think it was in Northern California, if I'm not mistaken, where the appraisal was the person bought the house for like in the 800s, appraisal come back in the 900s, and they had put $400,000 in improvements in it. And as soon as they moved out, they're like, they debated with the bank for a month. They move out. They have a friend come in who's Caucasian and changes all the pictures in the room and comes in at almost $1.5 million. That's a 50% upcharge. So you're like, in 3 weeks, not happening. So those kinds of things, and we've written several articles about redlining, about the ability to overcharge, whether it's interest rates, appraisals, you name it. And so accessible to capital for small businesses, that is access to home ownership too. All those play into the space. So you had mentioned a couple terms, and I'd like you to do a couple sentences, if you don't mind, about what each one of those terms that you were naming off there before, so our audience understands. Because he's smiling, but that's what I believe the federal policies of information that we need to get out, so they understand those terms and don't think that this has happened 50 years ago or 30 years ago. It's happening every day.
Yeah, no, I agree. I want to first thank you, Desiree, for all the things that you do in the industry. You're such a dynamic individual, heart for the cause of diversity and inclusion, and you're not afraid to speak up and push the envelope on a number of things in this space. So one of the things that I really want your audience to understand is that the issue of discrimination in the real estate and mortgage industry is not something that is an isolated incident and something that happened 30 years ago. All the time, the federal agencies are putting out reports each month where they're smacking someone on the hand or disciplining someone for some form of discrimination in real estate or for discrimination in lending. And when we talk about discrimination in lending, it takes a variety of ways. So we often hear about this word called redlining, which really, it became nationalized in the 1930s with Franklin Delano Roosevelt as America came out of the New Deal. For those of you who are not aware, the banks had failed. People lost confidence in the financial industry. Some of our grandparents and great-grandparents and great-great-grandparents lost money in financial institutions, lost their homes. So the president of the United States at that time had to restore confidence in the mortgage market and to the financial system. So they created what they call the secondary market, which was to build trust in the financial industry, particularly for mortgages. At that point in time, we didn't have 30-year mortgages, right? You had 3 to 5, maybe 10-year mortgage at best. And so, or people had what they call contract loans. And so people would get a house, and if you missed the payment, you can lose your house. It wasn't like how it is now. Yeah. And so the government created these products in these financial institutions like the Federal Home Loan Banks and the Fannie Mae and Freddie Mac and FHA, all these things to help people get mortgages, and the government would back those mortgages. They put the backing of the federal treasury in support of these mortgages to help people, make it more affordable for people. And so the unfortunate part about that is that those loan products were not made available to African Americans for many, many years. And they were started in some in the 30s and other programs in the 40s. We think about like the VA mortgages. And why does that matter today? Well, the fact of the matter is that even today, some of the neighborhoods that were redlined, which they said if you live, and they actually drew a red line around you, and they had loan maps all over the country, and they had different colors, but the ones that were red said if you lend in these neighborhoods, the government would not insure or back your mortgage. And so 50, 60 years later, those neighborhoods are still, we call them banking deserts, unbanked, underbanked, underserved, all these buzzwords to say that those neighborhoods, which are, most of them are still comprised of Black and brown people, are underbanked, underinsured, and it's hard to get a mortgage in there, or your appraisal is often undervalued as a result. Now, why does that matter? Because even today, African Americans are still denied mortgages at twice the rate of whites, even when you have a similar economic and credit profile. We still have, it's easier to find a check cashing place in some neighborhoods than it is easier to find a financial institution. And there are 3 million Black people who have good credit, good jobs, but are not purchasing homes. And part of that is because of the trust gap that exists in the industry. And why all this matters is it's been a long continuation of inequality, exploitation, and a series of government policies that are really unfair. So one of the things I was mentioning earlier is what we call loan level price adjustments, or they call in the conversation type of way, they call it risk-based pricing. And prior to 2008, when you got a mortgage, they put everything in a pool and they'll assign a risk to a pool. So it's spread, and the pricing is spread across everyone in that pool. Now what they do is to try to generate more fees and money for the regulators at the federal level and for lenders as well. They charge higher fees based on your credit profile. So even if you work, even if you make $150,000, you make $200,000, and you have a 650 or less credit score, and you may not even have any open judgments, but say you paid your credit cards late a few times over the last 5 years, and you make $175,000 or $150,000, $200,000, and you just happen to have a 640 credit score, they're going to charge you more for your mortgage rate, and based on your rate and terms, as someone that has a 700 credit score but only makes $30,000 a year. Something seems like crazy with that picture. Even though you can pay for the house 5 times over, the rate and your terms are going to be higher. And so we've got to really look at the system and say, and so pricing can be very biased, it can be very discriminatory, and then for some people, there may be things that you pay for on a regular basis that are not even included in your credit profile that's used, where they overcharge and overprice you for mortgages. It's not just the interest rate, but it's the terms. And you buy a $500,000 house, another person buys a $500,000 house, you make 150, they make 150. And the question is, once the house is paid over 30 years, one person's paying 650, the other one's paying 750, after 30 years. That's where the bias in the industry is played out.
Interesting. Thank you for that clarification. We needed to let the audience know, because everyone assumes everyone knows everything. And
I appreciate that. And when you're in the Beltway, you're dealing with policy stuff, sometimes you're speaking at 1,000 feet. End of the day, the pricing disparity and discrimination is 2 people, similar profile. One buys a house 600, the other one buys a house 600,000, and after 30 years, one's paying 650,000, another's paying 750,000. Something's got to be wrong with that picture.
Right. And everyone looks at different reasons, and you go, no, you got to look at the break it down. So one of the things I think that while you're talking, you know, as a visionary strategist, I come up with ideas instantly. I think that if we were to do you know, the ideas is I remember when we were young, yeah, I know I'm a decade older, but remember during the day that you cannot ask, I remember when 42 years ago, you could not ask someone's age when you hired them. It had to be completely off record. And so if you think about when you go to apply for a loan, we should not fill out whether we're a veteran, whether we're a minority, anything until we fund the loan, because that way there's no way to know at the front, because it should not matter. So any classification that we put on, whether we're a woman, whether whatever, that we just literally fill out the application to be, as, you know, if you think about what they did with resumes, you know, when Google went through about the biases, whether we're having women or men that go through the resumes, and they got, based on what they had out there, they got discarded, and they had to rewrite the system as going through the ideologies of checking. Apply that to applying for a home. If you were removed and it was a person, had job, debt, and compensating factors, and that's it, and you knew nothing about the person, of their origin in any capacity, likes or dislikes, and no one was allowed to know until you filed the form, because a lot of our veterans, as we know, they didn't know that they were in the military, let's say, when they filled out their loan application, say 20 years ago. It wasn't a question, right? So you take that, then that could be a way to help it get faster as far as the alignment, right? Make it completely less in any capacity of all the isms of lust to that application. The second thing, we talked about the appraisal process. We talked about, you know, that where that poor couple had got victimized. Well, that's just one isolated case, because that was like massive fraud, right? Or I shouldn't call it fraud, but abuse. Well, there's a lot that happens, whether I've seen it to where it was 10%, 5%, not 50%. So every time you talked about exploitation, we should do the reverse logic, that whatever bank that did it, like we grade, you know, food industries, how good a food, that the food inspectors come in and say, okay, you know, we're gonna clean the restaurant, and if you have insects, whatever in here, we're gonna degrade you. Everyone gets to know about it. Same idea. If someone is doing something that there is a called out and say, okay, this particular entity did this, so people know, and then they get press that goes with it. And I'm not saying to be blatantly crazy, but the idea is that, okay, this is what happened. This is the bank. This is the company. This is who my LO was. And did they resolve it? It gives them the opportunity to clean it up and not just let it go by the wayside, and they can get better. Because one of the things is that, you know, we become so polarized, we've got to call it out. So I think those two things I think would be very helpful. And I'm down, as you said before. I stand up. I don't sit around, and I have that voice. So I'd love to partner and get that out there. So let's dig into our rules on federal policy for home ownership. So number one, what's number one rule?
The number one rule on do your homework.
Okay.
You know, I think it's really important that people do their homework on the issue, you know, especially when you're trying to go on Capitol Hill. Know the answer before you ask the questions, what I often encourage people, right?
Yes.
Because, you know, if you're looking for the answer, elected officials and their staff know how to give you a non-answer. But if you know the answer, you can be polite and ask the question, and then weave it back in about, and this is where I found this information at, right? And so do your homework, study the individual, know what committees they're on, Don't go meet with somebody about a tax issue if they're not on the Ways and Means Committee, right? I mean, you can talk to them if you generally want them to vote for it, but if they're not on that committee and you're trying to get something moved out of committee, you know, you can ask them to sign a dear colleague letter, right? But you want to know the rules of the game. So, you know, if you want something in the budget, right, you need to know when the budget year is, what committees affect that budget, right? If you gotta, you know, you want to do your homework. If you're concerned about this, you know, the speed limit, or you're concerned about RESPA, you know, or you know, lending policies or mortgage power developer, or you want more money for home ownership assistance, do your homework, find out what agencies impacted, because there's a lot of federal agencies that deal with housing. There are a lot of federal agencies that deal with some type, have lending programs, all different type for lending programs for housing, for business development, et cetera. So you want to do your homework and study the White House as well. There are a lot of offices in the White House that can actually help you. It's easier actually to get a meeting at the White House than you can imagine, but you have to be organized and be intentional.
I love it. And the idea is that also, I believe in doing your homework. It's just not about the policies and about the what committees they're on, and also knowing the answer before, but also to know their personal interests. If you go in there with just the agenda to be work and I'm here to rah, 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 you have to connect, because people in today's world, especially, we've lost humanity some. We have to be relatable, and to be, you have to be, you know, some way that you can connect with them emotionally. It's almost gotten to the point where it doesn't matter what we say or what we do, it's how you make someone feel. And if you can walk into that office and make them feel loved and embraced and connect to them, it makes all the world a difference.
No, you're right on. You know, knowing if you do part of that, doing your homework, you're absolutely right. It's finding out, you know, particularly in this day and age, you have so much information online, right? You can look on their website, see what bills they've sponsored, which ones they co-sponsor, what type of events they're doing, see what causes they're on, what committees they're on, what type of organizations they're supporting. So the more you can relate to that, and if you're trying to get someone to be a champion of that issue, that's great. But then there's some hard ones as well. Some people, you go to a meeting, you know they don't support what you're saying, but you're trying to persuade, or you're trying to persuade them to support, or persuade them to stay out the way. So that is part of your thing of doing the homework, which ties into the next thing.
Go for it. What's number two?
So the next thing is, when you talk about federal advocacy, you got to have a plan. You know, what's your plan? You know, what in that plan is, what's your objectives, what's your strategies, and in that, and then you have who are some of your targets, right? And what's the outcome that you ultimately want to see? If you say that you want to, if you want to see the interest rates get lower, right, for mortgages, right, who do you need to talk to about that? Is that a White House issue? Is that a Federal Reserve Bank issue? Is that an OCC, Office of the Comptroller of Currency? Is that the Senate Banking Committee person? Is that the Secretary of Treasury? Is that the Chair of the House Financial Services Committee? Who are, or subcommittee chairs on financial institutions? So you have to study, you got to come up with a plan, right? What's your message, right?
Yes.
What's your, you know, what's the outcome you're looking at? And what are the steps you need to do to get that mortgage interest rate reduced? Can that be done legislatively? Can that be done from a regulatory perspective? Does Congress really have a role in interest rate reductions? You know, can you influence it through public opinion, right? Through op-eds, through social media ads, through holding press conferences, through hosting rallies. those are in the strategy and tactics perspective, right? But
Yeah.
in the targets perspective is, there's certain principles, certain leaders you got to touch to do that. So all that is part of having your plan. And then what is going to cost you to do it? Is it going to cost you? You got to hire a lobbyist. Can you do this from a grassroots campaign? Can you just do this through go to change.org and do an email, getting 1 million signatures, right? So there are a lot of ways, but you got to have a plan. And it doesn't always have to be, 100 pages. It may be 5 or 6 pages. And you got to be disciplined to follow your plan.
Look at the energy that you came. You started moving. You came alive. You're like, in it. We're going to do this. No, and I love how you brought in, the different platforms that you could do it in. And one of the things that I like to tell everyone is that part of that plan has to be not think about it. It's just, oh, I'm going to do it. You have to, a lot of things that we've been writing for the last 10, 12 years, you can reference back to, you can say, no, we started this. Like, one of the things that people say, oh, everyone's on Dodd-Frank, 342. And I said, no, we started this in August of 2010. We wrote the very first article and it was published. It's out there. You can't dispute it. We were awarded for bringing it out of DC into the general public and what that looks like by Congressman Waters. And we've written so many articles in integration to that. And with that being said, we have to look back and say, when you go into these meetings, to say that here is what we have and here's what we've been doing, but you have to make sure you leave a very articulate article and not just be, it's going to be, 10 pages long and summarize it, bullet points, make it highlighted, because they have so much data. And if you can't have an eye-opening one-liner introduction to snag it, do the first couple lines there, and then fill it out, you're lost. You're never going to get it passed. And if you don't get the stewards of the congressional people, the Senate, whoever, to actually look at it, and those people to actually champion it, all bets are off, because you have to have your team and your tribe internally, externally, and right. And I always tell everyone that LinkedIn, in my opinion, is the most profound way to get you noticed on a regular basis on what your ideologies are, what your beliefs are, and how you can champion the cause and get everyone behind you and rally you if you have a plan of direction, right? And you talk from the heart, and you also talk for data analytics to go with it. So excellent. I love it. So the plan is, because you never know who's watching and who wants to join you in that crusade and mission. I mean, interest rates now are pretty darn good. So it's not too bad right now where the interest rates are. But on the ability to have access to capital, and one of my biggest crusades was the plan you talk about, was 5 years ago, when most people still today don't know that we have disability, and we have disability from the SBA. They now know because of PPP and EIDL loans because of the pandemic, because it was basically, in my opinion, I call it free money, because you get out 1%. But the reality is that most of our renters and homeowners don't know that you have the SBA disability that you can get for $40,000 for renters and $200,000 for homeowners on a natural disaster. And I'm like, that knowledge, to understand that you have that accessibility to it. We made a campaign to say, instead of when Hurricane Irma hit and Harvey hit, only 10,000 people applied for the SBA national loan at $400 million. Well, if you have endless money to give, why aren't the renters taking advantage of it and the homeowners taking advantage of it? Because most of the professionals didn't know about it. And those are things that, that plan of attack you talk about, understanding those things that go with it. So I love it. So number 3, be kind, be patient, be diligent, be intentional. I love the B. You are on the pocket. So talk to me about that.
Yeah. So, one of the things that you have to do in federal advocacy is understand that these offices are open 52 weeks a year, right? So, being nasty to the college student, is not going to get your call answered faster. Being persistent will, being nasty won't, right? Because saying, hey, we really need your help, this is a really important issue, is not, that's different. And being patient, understanding that changing legislation or changing regulatory issues, oftentimes that can take years, not like a couple years. Like getting a law passed can take anywhere from 3 to 10 years, easily.
Wow.
So think about health, the Affordable Care Act. Individuals were working on that law for 30 years. I remember, and some of us are still trying to deal with prescription drug reform. I remember in the early 2000s protesting outside the office of then former Speaker Dennis Hastert's office outside of Chicago about prescription drug reform. We are still, whether a Democrat or Republican president is the White House, we are still struggling with the ability to make prescription drugs affordable for people. So laws take time to change. Every now and again, there's a moment where something happens quickly, but understand that there have probably some group, some individual 5 years ago, 20 years ago, 30 years ago that tried that issue, didn't pass, and now this moment is able to pass. There's really no new ideas under the sun. It's just they're repackaged, retooled, readjusted, and then they become new laws, or they're finally implemented in some different form or shape or form. The last thing is be intentional. It's really important. Know who you need to meet with, know who's going to impact your policy. Be intentional on the relationships and partners that you bring to the table, and make sure that you stay focused and keep your eyes on the prize. Be nimble, but also be flexible as well. Often say there's certain things that you can't negotiate on, and there are some things that you can negotiate on. When you go meet with an office or agency, go in there knowing these are the one or two. You're going to throw out 5 or 6 things, but these are the 2 things you must get done, right? And so you can negotiate on these 2, 3, or 4, but this 1 and 2, you got to get those done. Otherwise, you didn't have a successful meeting. Even if they say they'll do it or they'll look into it, you know that you got their attention. You don't get distracted with these other issues because you really got 5 things on the table, but there are 1 or 2. These 1 or 2 you got to get done because you're here. These your primary things you need to get done, and you're intentional about your actions, your efforts, your messaging, your words. And so you got to be, as I stated earlier, you got to be diligent. Offices get a lot of emails. They get thousands of emails. They get thousands of phone calls, and they have meetings every hour on the hour. Some of these offices have 5 or 10 staff. Some may have 20 or 30. They're all getting committee reports. They're all giving briefings to their members and their chief of staff. And your thing can easily get lost in the sauce. It's not intentional, but if the squeaky wheel gets the grease, you got to be squeaky, but you got to be nice. Thanks.
I love it. You come alive, but you can see your passion come out. That's great. I mean, you called out, know the rules of the game. Hey, why do you think I trademarked? I could not believe when I went to go file the trademark that no one had trademarked know the rules of the game to play the game. Seriously, right? You talk about squeaky, oil, the squeaky wheel gets the knowledge of keep it going. And the other one, it's fantastic. I love it. So, if you think about where we've gone, where you talked about the repurposing of and retooling and putting it together, but nothing's new. One of the things that I did 10, 11 years ago, actually 12 years ago, when the omnis were even before they informed and we came out with the Dodd-Frank, I made a very intentional movement that I wanted to go sit, because most people, the fact that no one even had press about them, how do I get to know them? How do I get to champion them? How to be part of them? And I made a point to go and introduce myself and talk about, and they were like, yeah. And so I made sure that the articles, the information, the work that I was doing, that they knew about it. They saw it on a regular basis, never asked for anything. And I remember into about a year or two, and it became very popular that everyone wanted to talk to them, whether it be for federal contracting, whether they want to get into, they found the avenue was to go that way, to go to navigate through the system, right? Intentionally get it done. And I remember someone making a comment to me, and they go, because I became, very well connected in that space for last 11 years now. And one of the people said to me, they said, Desiree, why you? Why you when I've got 1,000 people that want to be here to talk to me today? And I remember meeting out in the lobby, knew the person pretty well. We weren't friends and went out to dinner and all that stuff, but knew the person pretty well. And I sat down in the lobby and I said, because this, and this, and here's this, and here, by the way, here's the magazine that has all these things that I've done, and this is where we're doing, and this is our direction to go. Done. And what do you like? Well, how can we do it? So sometimes you have to let them know that it's not only that what you're there for, but this is what you've done in your homework, as you talk about, and what you have an intentional tribe to put it together to help you with it. But you're already doing it besides just being there and say, knock, knock, I'm here. I need you to do this for me. And that's where I believe that the intentional piece of putting everyone together to help them. So we have number 1, do your homework. Number 2, have a plan. Number 3, be kind, be patient, be diligent, be intentional. And if you think about that ecosystem, it really boils down to doing federal policy, whether it's for Black homeownership, whether it's for any kind of agenda that you have. You really align yourself with the people who are going to be, we'll call it low-hanging fruit, to help you get there. Then you're going to have the ones that you very nicely framed, those who you don't want to be in your way, don't agree with you, but you want to make sure that they're not going to block it, but just kind of go around, right? And those who are going to find other ways. I believe doing your homework is finding out who 30 years ago or 20 years ago, 10 years ago, had the same mission. See who's running it, see who's involved, see if they want to be part of you to help move that agenda. Because we do have, because of the pandemic, which is a good thing, we have the audience and the people at large to understand. They had eyes on it. I mean, think about it. You and I travel all the time, every week we're on a plane going somewhere and doing something. We actually had a moment to go, oh, I wouldn't have caught that. I didn't know about that because we were trying to do 10 things at once. And now we have a moment, now that we're not doing that, we're doing 20, but we actually had that moment of pause and go, wait, we just had 10 of these and 2 of these and 4 of those, and we could absorb, right? I mean, here, we're talking about Black homeownership. We could put the delineation on, we have I believe the core of humanity has to be togetherness. We just had 8 people just shot last night, 6 Asian women, and the violence against, the racism and it's just, okay, we've got the disparity of the African Americans, the disparity of the Asians, the disparity of people being, not nice, not humanity is gone, and we've got to connect and love each other and support and be kind. So that being said, how can we
spot on that? You're right on. I mean, we have to do more. That's why I said about being kind is so important. And sometimes you don't have to like people, you don't have to like situations, but we don't have to be disagreeable all the time. You can be passionate without being belligerent.
That's so elegantly said. I mean, we're trigger happy. And my eldest son, who's 36, I have 4 boys, said, Mom, we can't have triggers that are constantly just flaring up. And I think that is probably one of the most profound things, that as simple as we could talk about, that if someone says one word or one sentence that, meant well, but just in the frame of mind, not be present and be, trying to multitask too much and say something, not realize what they said, let them know. But don't be trigger happy and just go boom and go down the rabbit hole. And you started off with, hey, did you do the toothpaste, put the lid on it first before you just take that conversation to go down? I mean, being very, simple here, but
you're spot on. You're spot on that.
It's just, we're in a heightened adrenaline flow, whether it's the coffee, whether it's the Zip Fizzes, whether it's the 5-hour whatever blast or the monsters, you name it. We're all just like, "Ugh." I'd like to take a moment. I know we're running out of time, but I'd like you to take a quick second on what are the principles, what are you doing? Like, we have principles now for the NDLC called Pass the Torch, Acknowledge Trailblazers, and all these incredible things. What are the number 3 policies or things that you're working behind the scenes that we can help you on?
Well, first, I want to thank you for all of your leadership again. The association is aggressively working on a number of key issues. One is getting the American Dream Down Payment Act across the finish line. This federal piece of legislation would allow people to save for a home the same way they can for college through government-backed savings accounts. So that's really important because the down payment is one of the top 3 barriers to home ownership. So allowing people to save for a home the same way they can for college. The second thing is making sure that we support some of the initiatives that the Biden-Harris administration are rolling out. One is a $15,000 credit that can be used at the closing table for home ownership. That would be incredible. We know that many people need help with the down payment. We think that could be extremely helpful. The third thing is something that can be done administratively by the Secretary of HUD, who was just confirmed last week, who was Marcia Fudge. And that regulatory change deals with student loan debt calculation to mortgages that are insured by the Federal Housing Administration, also known as FHA. And so right now there's disparity that exists when you get an FHA mortgage compared to a Fannie Mae or Freddie Mac backed mortgage in terms of how they calculate student loan debt. FHA mortgages, if it shows up on your credit score, they automatically impact your debt to income ratio by 1%. Whereas with the Fannie Mae and Freddie Mac mortgages, they go over stated payments, right? Which means that that amount could be cheaper, which then allows you to get better terms for your mortgage. It's not just the interest rate, but it's the complete terms of your mortgage. And so that's a fixable problem, and it can be done. So we really can use your help on this FHA student loan debt calculation reform, getting rid of that automatic 1%, allowing them to use stated payments as well. And then the last thing I would say is dealing with risk-based pricing and also mortgage insurance on the life of the loan. So risk-based pricing didn't exist. We know that there's biases in the system. We're using outdated credit models that are overcharging people. We had our annual State of Housing in Black America report shows that it's ripe with biases in it. And a lot of CEOs and mortgage companies think that risk-based pricing needs to be eliminated. So we need to do that. And then the issue of life of the loan on mortgage insurance. While some people may say a person can refinance out after they reach a certain equity point, well, say if that person reaches that equity point, but they're paying their mortgage on time, they paid that mortgage for 7 years, 10 years on time, never late, but maybe they don't pay all their other bills on time. So that person can't get a good refi deal, even though they may have reached a certain level of equity in paying that bill on time. So it wouldn't make sense for them to refinance with that same company or another company, because the terms may not be as good, even though they reach a certain equity point. So what we're saying is, let's not have it on the life of the loan. Once a person reaches a certain ownership equity point in that mortgage with that house, that mortgage insurance should automatically fall off. They shouldn't have to go refinance, hope that they have stellar credit, hope that they did all these other things right. life happens. But if they're paying their mortgage on time,
Yeah.
right?
The number one thing is a place of sanctuary, because if you have to have a roof over your head. So I'm down. That's fantastic.
Yeah. So it doesn't make sense to make a person have to go through all that once they reach a certain point of equity in their home. Their mortgage insurance, they've already demonstrated that they're going to pay, and so it should fall off. And people should not be put in a trick bag where, okay, if this isn't right, that isn't right. They got to still pay mortgage insurance for the next 10 years or 5 years or 3 years, and that money could be used to, fix their gutters. It could be used to start a home-based business. It could be used to send their kids to college. That additional $100, $200, $300 a month, or $3,000 to $5,000 a year, you multiply it over 4 additional years, or 5 or 6 additional years. That's anywhere from $20,000 to $50,000 that's being paid for mortgage insurance that they don't need, that could be used to save in their home. So that's why these policies matter to people.
Well, you think that is so, every one of those we're behind. And so if you think about, we're talking about our houses are aging. So that savings that you just talked about would offset the deferred maintenance. Back in the days of the default industry, you were being billed for properties that, $1,000 a day for not having your exterior painted, or a fine for this or fine for that. Well, I can barely afford to make the payment. Why are you fining me for the condition of the property? And you could go on. So that is so I challenge you to this, that I know I've given you 2 challenges, one offline and one online. We got to have some fun here. So the challenge is this: our deadline for our magazine is March 31st. That's 2 weeks from today. I would be honored to have an article in there about the information that you just expressed here, about the fact is that what are you doing to, it's not an infomercial, but it really is, in the sense that you're talking about the information. So what are the policies that you're working on, so we can make sure that Interview can get our name on those letters to help endorse what you're doing, but also that we can rally behind you to help bring the stories that are talking about that. Because what we're doing is that we put down our monthly themes about how we can help individuals and the leadership that we have, because pass the torch. This is exactly, if you think about you're talking about removing the MI off of the back end of it after you've gone through so much stuff, right? Instead of have to requalify, because we teach everyone, pay your mortgage, everything else will work on, pay your mortgage. And if you're not embracing and rewarding them to pay the mortgage, then why? The idea is that, well, we'll have a forgiveness, a way to, and all that kind of stuff. So I love everything you said. I think it's fantastic, but this is a way we can channel it, because remember, we have the women's side with all gender, all ethnicities underneath us, but the SBA we're a resource partner. There's only 9 in the United States. So when you talked about starting a business, 60% of all the jobs have not even been created of the future, because we're transitioning.
I want to just say, I want to first thank you. I got to run in a second, but I want to thank you. Hopefully you will allow our president-elect, Lydia Pope, to come on. She's
absolutely.
She's going to be the only the third woman in 73 years of the association to lead the association. So she's running the show right now, and everyone's looking forward to her taking over as president in a couple months. And she owns multiple businesses, has a key focus on not only real estate, but contracting, real focus on women in real estate, and a real focus on diversity and inclusion. And so I will, hopefully you can reach out to her. I'll do an email introduction. I'll actually ask her to pin the article. I think it'd be I'm a progressive. I was 1 class short of having a minor in women's studies in college. So I consider myself to be a progressive guy, not a perfect guy, but a progressive guy. So we look forward to putting an article together. And I think if we can do a 2.0 on this with Lydia Pope, I think that would be phenomenal. And I'm not sure if you all met before. but she's out of Cleveland, Ohio.
I think I have. I'm horrible with names. I'm great with faces. So I think I have,
I'll do an
yeah.
email introduction to you and her. And I think that I'm praying that at this moment, with everything that's going on and trying to do more for women in real estate and women in business, that we can do more together with your association and NAREB for 2021 and beyond.
Thank you so much. I'd be honored, and this is up my passion in my heart, because the more we know, the better we can help. So know the rules of the game. So I want to thank you very much, and thank you for taking the extra few minutes to stay on. And next week we're going to have know the rules of the game for women's homelessness. So we really dig into the fact of what's going on with Bertel. And I want to thank you again from the bottom of my heart. I'm Desiree Patno from NAREB. And how do we get a hold of you? It's nareb.org.
.com, NAREB.com.
All right. Thank you very much.
You can follow Antoine on Twitter or LinkedIn as well.
There you go. Thank you very much. We'll have a write-up on this. Everyone have a blessed day. Be healthy and stay safe. Thank you very much. Take care.
Thank you.